Hi everyone. Welcome to Level Up Dividends channel. Monthly dividend stocks can offer several benefits for investors, including regular income. Monthly dividend stocks can provide a steady stream of income for investors who rely on regular payouts from their investments. Since these stocks pay out dividends every month, they can help investors meet their income needs on a more frequent basis. Compounding. Monthly dividends can be reinvested back into the stock, allowing investors to take advantage of the power of compounding. Over time, this can significantly increase the value of an investor's portfolio. Predictable cash flow. Monthly dividends can provide a predictable source of cash flow for investors, which can be particularly useful for retirees or other investors who need to manage their income stream. Lower volatility. Monthly dividend stocks tend to be less volatile than their quarterly or annual counterparts. This is because companies that pay monthly dividends often have stable cash flows and are more likely to be in defensive industries. In today's video, I present a list of the 14 highest yielding monthly dividend stocks. You would be surprised what some of these stocks would pay you in dividends. Now let's get into it. Stock 1, Gladstone Capital. Gladstone Capital is a business development firm that focuses on the lower middle market, growth capital, add-on acquisitions, change of control, buy and build strategies, debt refinancing, debt investments in senior term loans, revolving loans, secured first and second lien term loans, senior subordinated loans and mezzanine loans, as well as equity investments in the form of common stock, preferred stock, and limited liability company shares. It works as a company that develops businesses. Dividend yield, 9.02%. Dividend safety, 21. Dividend growth, -1% per year in the last 5 years. Dividend growth streak, 1 year. 3 analysts consider this stock a buy with a target of $11. Stock 2, Gladstone Commercial. Gladstone Commercial Corporation focuses in single-tenant and anchored multi-tenant net leased industrial and office assets. The trust focuses on primary and secondary markets with solid employment, positive economic growth patterns, and expanding populations. Dividend yield, 9.11%. Dividend safety, 30. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 0 year. According to analysts, the price target of the company could reach $14 per share, which represents an 8% upside potential. Stock 3, SLGREEN Realty. The company is the largest office landlord in Manhattan and a member of the S&P 500. It is a fully integrated real estate investment trust, or REIT, with a primary focus on buying, operating, and increasing the value of commercial buildings in Manhattan. SLGREEN has stakes in 88 structures totaling 38.2 million square feet as of December 31, 2020. This includes ownership stakes in buildings in Manhattan totaling 28.6 million square feet as well as 8.7 million square feet used to secure loans and preferred stock investments. Dividend yield, 8.74%. Dividend safety, 40. Dividend growth, 2% per year in the last 5 years. Dividend growth streak, 0 year. According to analysts, the company is now trading at its fair value. It would be better to wait for a better entry point if you would like to grab some shares. Stock 4, Prospect Capital. The fund aims to make investments in firms with EBITDA between $5 million and $150 million, revenues between $25 million and $500 million, and enterprise value between $5 million and $1 billion, for a total of between $10 million and $500 million each transaction. Additionally, it fund co-invests in bigger ventures. The fund offers different layers of the capital structure in order to pursue control acquisitions. The fund concentrates on deals that are single, agented, club, or syndicated. Dividend yield, 11.15%. Dividend safety, 30. Dividend growth, -6% per year in the last 5 years. Dividend growth streak, 3 years. The company is now trading close to its 52-week low. It could be a good time to buy this stock. Stock 5, Motive. Real estate investment trust Motive seeks to distribute monthly dividends to its shareholders, as the name suggests. The company specializes in acquiring, owning, and actively managing single-tenant net lease industrial, retail, and office assets in the United States. These facilities are often occupied by investment-grade tenants and are strategically important and mission-critical. Dividend yield, 8.94%. Dividend safety, 44. Dividend growth, 10% per year in the last 5 years. Dividend growth streak, 9 years. According to analysts, the price target of the company could reach $16 per share, which represents a 24% upside potential. Before getting to the last stock, please push the like button to help grow the channel. It takes me a lot of energy to do the research and try to come up with a good content. I would really appreciate it. Now, let's go on. Stock 6, Dynex Capital. Dynex Capital makes leveraged investments in mortgage-backed securities, MBS. It makes investments in residential mortgage-backed securities, MBS, commercial mortgage-backed securities, CMBS, and CMBS interest-only securities. Dividend yield, 11.74%. Dividend safety, 40. Dividend growth, -6% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the price target of the company could reach $14.50 per share, which represents a 9% upside potential. Stock 7, Pennant Park. The firm is a business development company that makes secondary direct, debt, equity, and loan investments. The fund also attempts to invest through direct investments, warrants or options acquired in connection with debt investments, floating rate loans in privately held, thinly traded, or small cap, public middle market companies, equity securities, preferred stock, common stock, and warrants or options. Dividend yield, 10.92%. Dividend safety, 23. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 11 years. According to analysts, the price target of the company could reach $12 per share, which represents a 3% upside potential. Stock 8, Horizon Technology Finance. With a last 9-month annualized portfolio yield of 14.7%, the company has produced enticing risk-adjusted returns through directly originated senior secured loans and additional capital appreciation through warrants. Dividend yield, 10.08%. Dividend safety, 14. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 5 years. Although the stock has an enticing dividend yield, it is risky to buy at the current price level. It looks overvalued. Stock 9, Cross Timbers Royalty Trust. Cross Timbers Royalty Trust, a roughly 50-50 oil and gas trust was established by XTO Energy in 1991. Unit holders in this combination trust have a 90% net profit interest in properties that provide income in Texas, Oklahoma, and New Mexico, as well as a 75% net profit interest in properties that produce income in Texas and Oklahoma. Dividend yield, 10.78%. Dividend safety, 30. Dividend growth, 14% per year in the last 5 years. Dividend growth streak, 2 years. The company seems to be traded at its intrinsic value, and reliable analyst source indicate a price target for this stock. So make sure to study thoroughly its price evolution before investing. Stock 10, Oxford Square Capital. As a closed-end, non-diversified management investment company, Oxford Square Capital conducts business growth. It is a mezzanine and private equity firm. The company makes investments in both private and public firms. It makes investments in syndicated bank loans, preferred stock, common stock, subordinated debt, junior subordinated debt, senior secured and unsecured debt, and subordinated debt. Dividend yield, 13.82%. Dividend safety, 8. Dividend growth, -12% per year in the last 5 years. Dividend growth streak, 1 year. The stock seems to be trading near its 52-week low, which might represent a good entry point if you are willing to buy some shares. Stock 11, AGNC Investment. AGNC is a mortgage real estate investment trust. AGNC stands for American Capital Agency Corporation. It invests largely in leveraged agency mortgage-backed securities known as MBS. Residential mortgage pass-through securities, collateralized mortgage obligations, and non-agency MBS make up the firm's asset portfolio. These are often supported by organizations that are supported by the government. Currently, it brings in a net income of $1.2 billion annually. Dividend yield, 13.94%. Dividend safety, 23. Dividend growth, -8% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the price target of the company is $10 per share, which represents a 3% upside potential. Stock 12, Orchid Island Capital. Orchid is a REIT that is externally managed by Bimini Advisors LLC, and makes investments in pass-through or structured agency residential mortgage-backed securities, RMBS, which are financial products that generate cash flow from residential loans like mortgages, including subprime mortgages, and home equity loans. Dividend yield, 17.94%. Dividend safety, 13. Dividend growth, minus 22% per year in the last 5 years. Dividend growth streak, 0 year. Not many analysts cover this stock. Like for other risky REITs, you should make your own research and try to determine the intrinsic value of the stock to determine whether it's a buy or sell and hence get a good entry point. Stock 13, Armour Residential REIT. Armour is a high-dividend real estate investment trust that predominantly invests in residential mortgage-backed securities that are issued or guaranteed by a U.S. government agency, such as Ginnie Mae, Freddie Mac, or Fannie Mae. Dividend yield, 18.60%. Dividend safety, 21. Dividend growth, minus 12% per year in the last 5 years. Dividend growth streak, 0 year. According to analysts, the stock has already reached its target price. You should make more research to establish its intrinsic value to know whether it's a buy or sell. Stock 14, Ellington Financial. Ellington Financial purchases and manages mortgage-related, consumer-related, corporate-related, and other financial assets in the United States through its subsidiary, Ellington Financial Operating Partnership LLC. Dividend yield, 13.17%. Dividend safety, 30. Dividend growth, 1% per year in the last 5 years. Dividend growth streak, 2 years. According to analysts, the price target of the company is $14 per share, which represents a 5% upside potential. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.